everyone, this is your host Vaibhav. In today's session of Daily Stock, we are going to look at the quarterly earnings of the consulting giant Accenture. It released its second quarter earnings for the fiscal year 2024, and in line with the expectations, it has lowered its revenue forecast. And why I am saying in line with the expectation, because for all the major IT companies, the IT consulting companies, the macroeconomic situation is quite similar. And in these challenging times where there is a spending cut from the global platforms, we were quite expecting the Accenture to also lower its forecast for the revenues for the remaining quarters of the year and full year in whole, and that's what it has done. Instead of expecting the growth in the vicinity of 5%, now it is expecting the revenue growth to be flat to maybe on the upside towards 1 to 3%, though there is a guidance on the lower side, and it has caused the stock to nosedive. The stock is now trading almost 15 percentage point lower in comparison to where it was just prior to the release of these earnings report. So this is a massive impact on the valuations of the Accenture. But I think in the larger scheme of things, this was kind of expected because we have a sort of revolution going on in the IT space, in the computer science space, because we have now generative AI coming to a situation where it is starting to have an impact on the company's performance. And even though the Accenture has taken lead and tried to offer solutions using the generative I think it will take some time for it to adjust its work culture to these newer factors emerging in the broader sense. And I think with this, the other major tech platforms are also going to hold back and see how things shape up and then decide on their spending priorities. So it's kind of flux, and that is what I think is impacting the market spending and its implications for the consulting and managed services provider like Accenture. Now we see its quarterly report in details to see how things have shaped up for it in the recent past. The new bookings for the company remains healthy at $21.6 billion, which is the second highest ever company's quarterly new bookings. There is also this new lead developing. The generative AI's new bookings have also gone up above the $1 billion mark for the first half of ongoing fiscal year. The revenues at $15.8 billion were flat in US dollars as well as local currency. The operating margin has seen increase of 70 basis points, and the EPS has recorded an increase of 10% over the second quarter of fiscal year 2023. So that's a sort of a bright spot, but this was pretty much factored in its valuations because the stock of the Accenture has been rising for last couple of months, and now that it has lowered its revenue guidance for the next quarter, the stock has declined and move on the lower side. The cash generated by the Accenture remains quite healthy. It has free cash flows of almost US dollar 2 billion, which is a healthy position on that front. It has also increased its cash dividend by 15% to now US dollar 1.29 per share. So these were the key highlights for its earnings. Now for the details, we also look at its consolidated statement of income. Here it comes. If you do the comparison of the revenues for the different quarters of this year and the last year, you will see that on the revenue front, the revenues haven't really changed much for the last quarter ended February 29th, 2024. There is slight decline, which is not substantial. So you can consider the revenues to have remained flat on year terms. The cost of services is also on the similar footing, and the total operating cost is slightly lower in comparison to the operating cost for the same quarter of fiscal year 2023. The operating income is now at upward of US dollar 2 billion, and after adjusting for the income, expenses, and taxes, we have the net income at US dollar 1.7 billion, which is 10 percentage point higher in comparison to 1.55 billion a year back. Let us have a look on the cash flow statement to understand how the company has generated its cash and where it is spending. For the cash from the operations, the signs were of mixed bag. There is this decline in the cash provided by the operating activities to US dollar 2.1 billion from US dollar 2.33 billion a year back, and out of that the company has spent a large sum on the investing and financing activity as well. For the cash used in investing activity, the sum stands at US dollar 2.2 billion, which is almost four times of what it had used a year back. And for the financing activity, the company's cash use has risen to now $1.8 billion. Net decrease in cash and cash equivalent is of more than 2 billion US dollars, and that has reduced its cash and cash equivalents, which were at US dollar 7.1 billion at the start of the period, to now at US dollar 5.12 billion. But still, it is a healthy position. There is not much to worry about on this front because it has distributed a lot of money in the dividends, in the form of dividends, and then it has also embarked on a share repurchase program. So in that, it has spent almost 2 billion US dollars. And then there is spending for the acquisition, the purchase of business and investment, which has also reduced its cash equivalents by US dollar 2 billions. So taken together, these two are sort of expenses related to the cash to the shareholders and the business prospects, because newer investments, newer acquisitions are going to help the Accenture in the coming quarters, and when it has gone for the share repurchase and dividend distribution, it's like rewarding its existing shareholders. So on both these fronts, the cash utilization is quite good. Now we head to the JForex platform to see how the share price has performed for the Accenture in the recent past. This is the chart formation where the candlestick time period has been defined at hourly, and if we see its recent price formation, you can notice that it was going flat for almost 2 months since the second half of January till the first half of March. There was not much of a change in the price of the Accenture's shares, and now after the release it has declined substantially. So this points to the prolonged consolidation, and after the prolonged consolidation has come decline because the Accenture has lowered its revenue forecast, and that has impacted the sentiments of the investors negatively. And as a result of that, we are seeing this sharp move on the lower side. And in the near term, this points to the obvious bearishness in the stock price of Accenture, and I feel it is likely to remain on the bearish side for at least a couple of weeks before we have any signs of revival and turnaround in the stock of the Accenture. I would suggest that it is better to remain on the short sale side. You can keep looking for the opportunities to go for sale on rallies approach as and when there is consolidation and stabilization, while not much signs of upward movement. We can indeed go for the newer trade as and when we see a risk reward ratio which is favorable. And for the medium term, the outlook is not going to be much different. It started its rally in the October, and from there on, when it used to trade close to 290, it went on to rally almost 30 percentage point, and now it has given up almost half of those gains as it has declined 15 percentage points from the top. And here, looking at its current price formation, if we go for a new long trade, new buy trade, it would be like trying to catch a falling knife. So instead of going for a new long trade by simply considering the prior price formation, I would suggest that it is much better, a much more prudent idea to wait on the sidelines, allow the consolidation to happen first, and as and when things start to stabilize and there is much more clarity on the price action front, we can then decide whether to go for a long trade or whether to go for a short trade. Given the pace of decline and the magnitude of decline, I feel now the prior bullish formation has changed to slightly tilted on the bearish side. We can't really say that it is full blown bearish phase. Maybe in next phase we can indeed initiate the short sell trade, but for that we will have to wait for a while. We will have to allow it to consolidate first, and maybe in the next time around we can adopt a sale on rally approach if it doesn't really rise much and continues to hold below the prior swing low of this prior formation, which is there around 350, 360. If the Accenture share price holds below these levels in next few weeks, then I think we will do well to initiate the short sell trade while expecting it to dive towards 300 or thereabout. So the medium term outlook has also changed to slightly tilted towards bearishness from bullish phase earlier. But we can't really say that things have gone totally bearish from the long term perspective because we still have this formation of higher highs and higher low in place. So, as long as that holds, we will have to go with the flow and keep in mind that from the long term, the Accenture still remains buy on dips trade, and the only thing which we will have to keep in mind is that if after the next few weeks it doesn't really deep too much and holds above this prior swing low of around 285 to 90, which was established in the month of October, we do have the possibility of Accenture starting to rise again. But these are too early days and it is just the beginning. So for at least next couple of months, we will have to see how price formation plays out, and maybe after that we will be in a better position to go for the new long trade from the long term perspective. New investment can also be made, but this is too early to say that the upward trajectory for the Accenture is going to hold from the long term perspective. Maybe after a couple of months, we will have much more clarity. So, from the long term perspective, we also need to wait, just like the outlook is for the medium term. And afterwards, we can indeed take our chances. So, that's my take after looking at the fundamentals and the technicals for the Accenture Inc., which has seen this sharp move on the lower side in the aftermath of its earnings release, in which it has forecasted a decline in its revenue growth expectations, and as a result of that, the sentiments seem to be soaring on the Accenture, and this is the result which we are witnessing. So that's my outlook for the current price formation of the Accenture, where we will do well to keep a bearish stance in the short run and then adopt a wait and watch approach in the medium term to long term, and depending on how things shape up over next few weeks we will have a much better idea of what to do for the second half of this year. Now it's time for me to sign up for the day. If you have found this information useful for your trading and investment decision, do write to me in the feedback and I'll be more than happy to take the discussion forward. Do like and subscribe to the channel for equally informative content host from the sessions hosted by me as well as other technical analysts. Now it's time to say goodbye. See you next time around with the equally interesting company to work with. Do come back.